Hi, this is Randy Finney with Right Side of the Chart, and today is Tuesday, April 7th, 2020. In this video, what I want to do is do an update on commodities, and I do know a lot of you know, it's easy to have the static charts. I'll try to take some screenshots and post these below, but I wanted to do an update. I've been covering quite a few commodities lately. We have some as official trade ideas. I have others that I plan to add more official trade ideas, and again, official, unofficial. 6 to 1/2 dozen to the other. It's often just a matter of me getting the time to mark up a chart, find an ETN that's trades with these the futures that I like to trade and watch, and then align price targets to those. So I like to get these videos out, to trade what you like, discard what you don't like. You guys know my views on the market. I think I've made that pretty clear lately. So, and I'm either going to be right or wrong there. And the thing is, I'll be right or wrong on anything the trade ideas that I personally take and throw out there on the site. And that's why I like to diversify. So, that's why I'm doing this video right now. Again, we have some commodities already as active trades, and I plan to add some more. And I do think it's a good place to be right now, where there's some pretty attractive risk reward setups, offering nice reward potential with risk can be quantified on just about anything, but some of these are better than others. And one of the reasons fundamentally, as I said, commodities, they don't go to zero. They don't have any financial fraud that's uncovered during market corrections like this. It was Warren Buffett that said in a letter to shareholders back in 2008 to Berkshire shareholders, something along the lines is, when the tide goes out, you see who was swimming naked, meaning that's when a lot of fraud exposed. Think back then, Bernie Madoff, quite a few other companies around that time failed, because that's where when you have that kind of volatility in the market, it tends to expose any corporate shenanigans or companies that were maybe operating with too much leverage or anything else. It works fine when everything's going up and the economy's humming along, but when the brakes come on, certain companies aren't going to be around. So again, there's the basis for commodities. They don't go to zero, but you can lose a lot of money if you don't control any trade with stops. So let's just leave it at that. I'm going to start out here with crude oil. Unofficial trade recently. I mentioned it on Friday as a short here at the 28.47 level right there with the divergent high. Gave us about I forget now, about a 10% pullback. That's the target I had it going to. If you recall, the scenario arrows showed us going down to 25.19 and the uptrend line bouncing from there and then going on to break down, eventually break this longer, more significant trend line and coming back down here to the 24.22 area. But we are at the 25.19 level again. It was support, was identified in advance as where we'd bounce in, so it's still support. We could have another reaction off it, but I think if the stock market does what I think it's going to do today and tomorrow and through the rest of the week, then crude probably continue lower as well, in line with the market. So that's that. There's the update, and still good for, I guess, that same drop. We had a slight momentum fueled overshoot, and did want to point out, start with this one because we are at support, so it's certainly an objective level to take books partial or full profits if you're an active trader. And on that, I gave you, what did I give you? I gave you SCO. Let me pull up SCO. Is one of the vehicles. It's a short ETN, 2 times short crude oil, and target zones up there. Pretty much, I think it hit it in pre-market the other day, the first time crude hit that level. It may be tracking not perfectly right now. Pointed it out back here with this divergent low. Either way, it is up, and that's about 20 from. I don't remember exactly where I pointed out. It was somewhere in here, but off that support level, that was the key support. It's up about 27%. I'm going to add one more line for you here, which does mesh with that support on CL. So it's the same story. We're either going to have a pullback here, reaction, maybe it's the end of the pullback altogether in crude. I don't think so. I just shared my thoughts where I think it's going. But we need to pop that level with conviction, 23.42, to get you up to that T1 zone right there. Comes in around 25 to 27. So that's the outlook for crude oil and USO. I probably should refrain from going over too many charts here. We'll be doing this video all day long, but that's what USO looks like. I had way back when here potential second target when that there was T1 right there. So maybe we go up there. Oh no, what am I talking about? We're looking at a long here, not an inverse. And there was that divergent high. So probably give you, let's move, that was an old stop line. Let me just use another line here for you and give you where crude may pull back to. Sorry guys, I'd have to study the charts a little further to align the pullback targets on CL, or the pullback target on CL with that of USO. So like I said, you can stick with that SCO trade for now. All right, natural gas is another one I mentioned recently, but while it was bearish on crude for the last since Friday really, and then obviously bullish before then going into those recent lows. I laid out this scenario here with the positive divergence stating we'd see it was not a matter of if but when we were going to get an explosive short covering rally, and that's exactly what we had in crude. Not that I pointed it out on the very bottom, but close to it. Crude rallied about 50%, so I think that qualifies as an explosive short covering rally, and I also think it is more than enough to satisfy the bullish divergence here on this pattern, clear out a lot of short interest in crude oil, and get it back to where it should be, because I still don't see a lot of planes flying around, and I happen to be in a not too far from a flight path on Southwest Florida Regional Airport, so it's easy to look out the window. I can always see where they're coming in depending on the winds or taking off, and haven't seen many flying around, so I'll let you know when I do, and at that point I'll probably be long crude oil when I see the planes starting to take off again, and at the rate they were before, of course. Okay, and a week ago today I published videos titled Stock Market, Gold, and Commodity Analysis 3/31/20, so that was March 31st. And in there I covered, among other things, these are lumber futures, LB, stating that we had this bullish divergence setting up, and I gave a bounce target of 309.54ish. Remember, unofficial trades are always the actual resistance level. You want to set your sell limit orders on a long a little bit below that. Official trades, I will do an adjustment because I don't hold out for the very last penny. If everyone sees the same level and they're all targeting 309.50, well, the sellers may step in early, which is, I believe, exactly what they did. That was then, this is now. Here's that bullish falling wedge right there, the divergent low highlighted. Positive divergence here on the RSI. Put in the divergence. We had a little downtrend line there where we popped it, went up here one day. I think what happened, I think these are lock limits on the futures when you see the blue lines, if they go up too much. And then right to that 305, there's that same level, 305.54. In fact, we hit a high of 305. Come on, pop-up box. Usually it'll work. There it is. High of, no, yeah, 309. So again, that's another example. You don't hold out for 309.50. You set it a little short, and came in right at that downtrend line. So where I'm going, well, for the near term, that was a target. If it can pop that level, probably need to consolidate, work off a little bit of the overbought conditions. You know what? I don't favor a move all the way up here, but that is the next significant resistance level. I don't see a lot along the way. I just don't think lumber, like I said, this was a short covered rally, oversold bounce. There's been a little bit of a demand. I saw an article for a lot of businesses boarding up. That's a lucrative business, those that provide board up services for business with anticipation, all the rioting and all that's going to happen now that businesses are closed. And there's always that element of people out there that will take advantage of these situations and break in. That's already started to be reported in some areas. But either way, I don't think that's enough to carry lumber up more. I think that's it, guys. I'd just say if you milk that one, I don't know exactly where it was posted. Well, I can tell you, in that video was at 278.50. I know it went a little lower from there, and then the divergences played out 278.50. Somewhere around here, there we go, right there, close enough. About 10% from there, and I think it was about 20 off the lows. So that's over. All right, next one. Let's move on to what has potential from here. Okay, next up was NG in that video, and I said I didn't have at the time a very strong opinion, but I did say it looked off for an objective long entry here at the 163.50 level. This is a screenshot again from that last video. And then intersecting downtrend line, you can take it with a stop there. And then I did follow up after that next on, I think it was starting on Monday, or a follow-up. I posted several charts on NG showing you an objective long entry. Let me pull up the current chart all the way back here. Started posting this in the trading room right there as a long entry on the breakout of this. So you had a pretty much big divergence. It's a lot like crude. Remember, crude had same thing. This is a 60-minute chart, same time frame we were looking on, same basis, that was made for a rally in crude, sharp short covering rally. And so divergence, as I always say, is not a buy signal, but then that was posted shortly after that video. A buy signal number one. We hit, and these were all targets and potential levels on the way up. Each of those have been hit. I posted several updates, including most recently we hit this trend line. I said that was a significant level. It broke out, ran up to the 1705 target, pulled back, perfect back test of the trend line, walked up. Where am I going with this? I think the run is over, at least for the time being. I don't have a sell signal yet, but I do have NG at the highest target I've had on the recent charts, which is 184 right there. Very significant resistance. I see negative divergence now on the 60-minute chart forming, and I have a beautiful trend line right here. So if you're long and you want to continue to ride this wave, no problem. I'm ready to turn around and short this one. May take it here after I do this video, or maybe a half position there and wait for a trend line break. But if you're long and you want to ride it up, certainly in an uptrend, I would set a stop not too far below this line. And remember, nat gas moves fast. When they decide, the Momo players, meaning momentum traders, decide that the gig is up, they turn on and go to the other direction, or they exit their longs pretty quick. So that's and there's that divergent high. It looks like that. So it's a bearish rising wedge rallying into resistance, off the lows. And that's what this market is full of, is big explosive short cover moves. That's a 22% rally in just over a week. Exactly a week. So that's it. Okay, those are my thoughts there. At UNG, you can trade. As I said, be careful of D-gas and U-gas, the 3-time leverage right now. Markets, have stabilized somewhat because volatility is somewhat abated, somewhat. Yeah, like I said, I've talked about the risks involved with ETNs and leverage ETFs. So trade at your own risk. And again, it's the thing is, if that's the only option or proxy you have to short natural gas, because you can't short futures, there's always you can always use a very small position size. You don't need to buy or sell or buy a lot of D-gas or U-gas. You're going 3 times leverage, 300% leverage on a security that, as you can see, in a week can easily run up 20%, and it can easily drop 20% and more. So it's the whole know your security thing. I like to say, know what you're trading, know what it's capable of, and what it's likely of, and then adjust your position size accordingly, because you don't need to put a lot of money in to catch a 30, 20% run in a 3-time leverage ETF, or futures, of course, which are highly leveraged too. Oh, sorry. Okay, I was flipping around trying to see what I covered next. We covered cut and wood as well. Remember, lumber futures or LB. That's trading lumber. To the best of my knowledge, there's not an ETF that is a pure play on lumber. But what you do have are two called cut and wood. I covered these are screenshots from the video. Cut and wood are lumber ETFs. I'm sorry, timber and forestry. So you have those companies are, the ones making toilet paper right now and paper towels. So they're in there, and those were also mentioned as proxies. And you can see there they've moved up nice again today. That's from last week, wherever we were, Friday. No, that video was from the what was it, what was the date on that? The 31st. That must have been Tuesday then. Okay, so that was Tuesday. Either way, they've moved up since. There's cut, there's wood. Since lumber's probably had its run here, I think that's going to be it for these guys here, at least for the time being. Now they may continue to. You could see lumber prices fall and these guys continue to go up, but it is certainly a headwind for them. But again, maybe they're stockpiling on selling a lot of toilet paper right now. but I think it's more of a fact, more of a matter they're having a hard time meeting demand. And of course, these big companies out there can't, they can't price gouge. It'd be a big no-no right now in this, especially with what's going on. A lot of people feeling a lot of pain, so not good for the big corporations, Kimberly-Clark, all those that make these paper products. Okay, and here's the next one up I covered in there. I'm not going through any particular order, just hitting all these. HG, copper. These are copper futures, and I gave you the ETN. At the time I showed you it was breaking out of this triangle pattern with a 224.10 resistance above it. And if it popped out, during the video I listed this price target right here, 233.74. And that was then. This is now HG. Where did we go? I must have moved the triangle, but there's the... Here, let me get back to that other one. Okay, looking at my chart, I tweaked it a couple times since because we consolidated a big level, 224.10. That one did pop it. What I did is I've added since a line to this reaction right here. We had a reaction low. There's that 233.74 target. We came close. Might not hit it now. We could. But there's that extreme overbought reading right there. And what I did is that trend line I had, that was the bottom triangle line there. That's what I did. I removed the upper trend line and put this horizontal line since then. And so we broke out. We've been back testing. This was a high level back test, so close enough. We could have another thrust up, but I can tell you this too. If we pull back, that 224.10 is very good support. It was a big resistance. We broke out, so here's a potential setup for you. If we pull back a little bit more, you might not want to hold out for a full test of 224.10. Maybe step in a little early and maybe hold it, just tuck it away. It looks like a breakout here. It may continue to run on past that target. If it continues much lower, you have trendline support here and then the bottom of that trading range there. But this is where I favor a reversal on or above that 224.10 level right there for HG. And then I gave you guys as a proxy for that copper ETF JJC. That's up 294. 3% today. You can see it gapped up out of this range right into resistance. And there's another copper. This might be an ETN, I'm not sure, but a member of the site had shared with me one that I didn't have on my watch list before. Let me dig that one up. It's another copper ETF, CPER. So it's also up 3%, and that one hasn't yet filled the gap. So like I said, that would align with that little more upside on copper futures. So there's another, again, these are just ways. You've got, I think a lot of people have done what the right thing to do is when the market started cracking earlier, moved a lot of money into cash. Those that aren't actively trading weren't shorting it, hard on the way down or don't like to short. These are long trade ideas. And again, these are, places to make money and not be in the volatile whippy stock markets. Not to say that these commodities can't move fast, and they can, but again, I'm, showing you things that you can buy long and also diversify your stock holdings. Okay, and around that time I did a static chart on coffee. Coffee's one I've been talking about for a while, mostly bullish and a lot of long trades in coffee in the last couple of years. Strategically we've caught almost all the big rips in coffee, hitting these divergent lows. We're using JO as our ETN proxy for it, and then KC coffee futures here. Again, you can see all the lines. This is a screenshot. You can see all the screenshots are always dated. This is March 30th, and kind of a wash, rinse, repeat thing. Look for these divergent lows to get long, and then look for these divergent highs to get short, rising wedge pattern. So at this point in time, I mentioned this was I pointed out there was this potential bear flag forming right here that had the potential, if we broke down, could spark another wave of selling right there and bring us down to this 111.99. So we'll call that 112 level. Nice support level, really nice support all the way back here. And so that was then. This is now. Boom, 111.19. That was a golden buying opportunity for you if you stepped in. Congrats to those that did. Now I'm moving the line. That's a problem with this charting platform. I'm trying to measure and just tell you what the bounce has been off that level. So far, good for about a 7% bounce off that 112-ish level. And since then, Let me just do an update. That's why I do these videos. So at that point in time, we had bullish divergence. We had small divergent low here, and we did bounce. It was a tradable bounce, but the divergence got even larger, and so hence a larger bounce. And we went on and we took out just recently this downtrend line here. So things are looking good. This is a live chart on coffee. You know what? Sometimes this one doesn't populate or update like the rest. But that's it. And there's a downtrend line breakout. In addition to the reversal off support in the divergent low, and broke above this downtrend line, that should open the door up for a move to at least that 122.50 level. Like everything, don't let it get away from you. If it goes against you, there's a trend line that could back test. So a logical place, that would be your first stop, a logical or objective stop somewhat below that trend line. And again, 122.50 to me is a pretty clear next target. Trade it as you want, probably get a reaction there, and if we can break out from there, then we take a run at that previous high. And here's JO, the ETN for coffee. Again, does a pretty good job of tracking. This is the proxy that I've used for the last few years. We used to use JOFF or whatever it had, JOFF, I think it is. They changed the name. It was originally Joe, and then JOJF. They stopped. Whatever they did, this ETF company, they changed it and they stopped supporting one. It went to the over-the-counter market, and they replaced it with this one. But again, you can go back for years and see a lot of these trades on the site, and that's it. Coffee trades well to the technicals. You get overbought and you get these sharp corrections, sharp rips and dips. But sooner or later, I do think the charts are setting up where we may see a new bull trend emerge in a lot of these commodities. And again, I made the case fundamentally, that people are going to start flocking to things I think that have more intrinsic value than stock market, because the stock market, I'm not an extremist, but a lot of people think it's a big Ponzi scheme. There is a lot of financial engineering that's gone on in recent years with corporate buybacks and easy money policies by the Fed that have allowed companies to leverage up their balance sheet and take that money and turn around and do the corporate buybacks, reduce their float and all that other stuff. So that we're going to see an unwinding there, as a lot of those buybacks have been halted. A good amount of companies have already halted their buybacks, and it wouldn't surprise me to see more do that. And that is, just read a very interesting article recently that shows factually that they netted out inflows and outflows in the last few years, and all of the returns, when you net out again the inflows from investors, individuals and institutions buying stocks, and those versus money being withdrawn, that it was all the gains in the stock market in the last couple of years were attributed to the corporate buybacks. Again, you have to understand that statement. They're talking netting out the the inflows from individuals and then looking at the amount of corporate buybacks. So what's going to happen to this market when it's no longer supported by a massive amount of stock buybacks? And you have another reason why I think we're going lower. Anywho, there's coffee. When you look at it this way, it looks choppy and sloppy, but again, that's why we're trading off that 60-minute chart of coffee futures. And that would be that reaction high right there on KC I showed you. If you're wondering what the next target would be, I don't have a hard target right now on coffee, but I just think it's something that looks good, and I think it makes sense to have a piece of your portfolio, small portion in this and some of these other ag commodities. Okay, next one up was cocoa. It's just cut off on the top there, but that's CC is a symbol for cocoa futures. And what I showed you here on the daily chart, first glance it looked bearish because you had broken this trend line and we're trading below and some flagging type action. But I believe, if I'm recalling, I didn't listen to the video now, but I believe I went on to say that I didn't believe that to be a bear flag or a bearish pennant right there, like it may appear to some. I think, as I said, there was a bear flag, a clear bear flag there. You broke down from a clearly bearish pattern, a bearish rising wedge pattern, confirmed with negative divergence, everything I like to see. And there was your initial leg down, your flagpole, bear flag, there you move down. So I said that had been met. That bear flag pattern right here had been met, and I viewed this as a momentum fueled overshoot and a bear trap, and showed you a scenario. You could probably, it's a little blurry here, but that shows a 7%. I was showing a rally up here to that resistance at 24.23. And if so, that would trigger, that would confirm or give us a confirmed bear trap. Sorry guys, a bear trap is a false breakdown where you have people come in short thinking it's going to go lower. A lot of eyes might have thought this was a bigger bearish pennant and we're going a lot lower in cocoa. And what happens when you have a recovery of the above the support level, you get a short squeeze. These shorts start feeling the pain and getting squeezed out, longs piled in. So that's 24, 23. Now what happened is the cocoa futures rolled. Every time that happens, I lose my annotations. I have to redraw the chart, so I'm just going to show it right here. That's basically the same level, and there it is. Bear trap complete. So is that 7% or so rally that I was talking to. The levels may change when they roll to the next contract. At least on this charting platform, the lines no longer correspond. They go to the next futures contract, the July futures. So that would have been the, yeah, you can just make it out there. That was the May contract back then. It was the continuous, and now we're on the July contract right there. So that's it. Good to go. And then I also mentioned, if you trade, and I talked about the case of the tail wagging the dog, is that I said NB, and I was this close to adding, and again, I've highlighted this one recently. It's one of my favorite commodities now, and said, look, it offers an objective entry here at trendline support. So whereas the futures contract was below the comparable trend line, the ETN, which again, sometimes you get the case of the tail wagging the dog. If a lot of inflows, a lot of people are buying these because they don't trade futures, but they do trade ETNs, and they're buying NIB, which is the ETN that tracks cocoa futures, then you're going to have the buying pressure from NIB. They have to turn around and then square off their position. A lot of inflows are going to end up buying coffee futures or some type of derivatives on it, and that's it. And as I told you, it's a wash, rinse, repeat thing. You buy at this trend line, don't overthink it. You're in an uptrend, it works until it doesn't work. So that's what happened the last few times you bought at the trend line, and so far, if you did buy the other day on this one, at the trend line when it was mentioned, again, you're up about 10% right now. That is a resistance level that I have on this chart, but again, look at the previous moves. There are going to be pullbacks along the way. I think at this point it's just prudent to raise your stops and let it run. If you got in there, you got in at a good price. And sugar is ready to pop. I can feel it in my blood, in my bones, I should say. Hasn't yet, but here's what I've been pointing out. I'm going to just put a little trend line here. It's working its way down. Remember, it did pop. We did hit our first target for a very quick gain. The day I added it, it popped above this trend line, rallied up. I don't know what, I can't recall now, maybe 10%, 7%, whatever it was, right up to that where I had it going initially, 1073. 0.1073 and the downtrend line. But what the bigger picture now remains this big bullish falling wedge pattern, complete with positive divergences, which help to confirm the bullish nature of the wedge. But as I said, we could continue to work our way down within the wedge. We could even undercut the recent low, and this pattern will remain intact. So it is in a downtrend. So yes, the trend is bearish, but this is a bullish technical setup pending an entry. So as long as the the divergences are in place and we work our way down in here, the potential's there. Now we could pop anytime. So at this point in time, I'm leaning that way. I'm starting to see more and more developments, bullish developments across the ag commodities, and the more that happens, the more it puts it on traders' radar. And I think for the reasons that I've said alone, this is where I feel more comfortable hedging my. I feel more comfortable being short most equities, and then instead of hedging with individual stocks, and if there's some that stand out, fine, I'll go long there. But I do like, as just rounding out my portfolio, I like these commodities, and I've been building a little mini portfolio of many of these names, and I'll continue. If we get a breakout here above the trend line and then that 1073, I'll add on, and I already gave you the targets before. You can see them marked here. A lot of upside potential if sugar runs. That could be about 22% if that 1280 target's hit there. So our official proxy is SB, and like anything else, SGG, and like anything else, patience pays. So there it is. We already hit our first target. The divergent low right there may be confirmed. We're about to make a bullish cross on any more upside, but that's it. So T2 is all the way up there, but I mentioned I might add, and I need to. I'll tell you again, sometimes I don't get the chance and the time to update these, but that would be an objective level to take profits if you don't think sugar is going to go all the way up here, or if you're that nervous type that sees a gain, you want to take it. There's nothing wrong with that, but if you do that, if you're targeting shallow targets, you need to use a little tighter stops. I usually base my stops set on the final target, sometimes the second target there. So there it is for you. And if we do rally up to that next target there, that's about 16% gain from where we're at right now, and about 35% if that T2 level is hit right there. That is sugar. Corn is also an active trade right now, an official trade. Those are your targets there. Trend line should come in first, most likely act as resistance. Let me grab the futures for you if I can get the right one here. No, ZB. I'll cover these in another one. The treasury bonds broke below those channels I was talking about before. Let's see, ZW, that's wheat. Here we go, ZC corn. There it is. Nice clean bullish falling wedge pattern right there. There's your divergence, and there's your positive divergence lines right there. 338.10 is the first target and its resistance, so maybe something like this could back test and go. Maybe we pop it, have a little consolidation, or not, run through there. And let me give you some additional targets for you futures traders. Let's see. Yep, we should have a little bit, we definitely have some resistance there that might come into play. But again, I'm looking at this, when I'm seeing a long, nice big bullish falling wedge like this, it's really not much different than that bullish falling wedge I pointed out in crude futures recently, wherever that went. CL right here. So these patterns, so this stuff isn't just magic. There's a lot involved in technical analysis, but the most simple thing to do when you have a bullish falling wedge pattern, you're going to see a lot of those from me, bullish and bearish falling wedge patterns. Take the widest part of the wedge and then add that to where the wedge broke out, where the breakout occurred, and that gives you your measured target here. Now I'm just eyeballing those lines. The way you can do it if you have a charting program, unfortunately this one, again, you move the lines. I can't start this line, so I have to estimate it, put it right there. There it is. So it's a little bit over. Let's just leave it at that. Put it to where we broke out. The breakout occurred right here. And so look, you can't make this stuff up. I mean, there it is. That's the measured target right there. And so that is another reason why I can just eyeball this chart. I didn't show you that measured target before, but I can eyeball the chart, and that's why I mentioned after being bullish crude back here for the last couple weeks, mentioned as a short here on Friday, because it pretty much met its measured move. The divergences played out, and that's it. And now here we are coming up on that target I told you, on Friday, last Friday, that we'd hit, and again this morning when I started the video, and there it is, 24.22. And again, you want to cover a little bit above that level. We hit a low of 24.39. That's good enough. Actually, let me just add this. Crude's probably going to go lower if I'm right on the stock market, and we pretty much just finished our bear market rally at this morning's highs. And so you can see some additional levels here. And I would say maximum right now, that 2174. So there's a swing target if you want to milk another, just have to guesstimate that line, another 10% or so downside. And what you can do here, so you don't lose, just trail stops down. If the stock market dumps today into the close, we'll probably keep going down, and that can add to your gains. And if we kick back, then maybe you're giving back 1, 2, 3%, whatever you want to trail on your stop on crude. Okay, and if you hung in here with me so far, we're going to wrap the video up with just two more new trade ideas, something else that I haven't covered recently, and that would be pigs and cows. So we're looking at LE, live cattle futures. That's a symbol LE, setting up in a nice bullish falling wedge pattern. Now this is a daily chart, So keep that in mind when I say that. I'm usually looking at the in these videos on the futures 60-minute charts. This is a daily chart, and a divergent low, positive divergence, and a bullish wedge pattern on a daily chart has much more powerful longer-term implications than it does on a 60-minute pattern. So you can see potential targets. Now the first resistance level, we closed right at it today. These, oh, by the way, guys, you got to know your stuff too. A lot of these ag commodities, not all of them, but a lot of them have quirky hours. I think on cattle, live cattle, as well as feeder cattle, they close, I think, at 2 p.m. Eastern time. They stop trading. They trade on the CME, so it's what is it, 1 p.m. over there, and hogs, I think, are also 2 p.m. as well. So I'm going to get to the ETF. I know if you don't trade futures, I have an ETF for you, and we'll get to that in a second. So where we're at is we closed today. I think these guys hit their lock limit up. I think they stopped trading early, but either way, we're going to go, if we could pop 85, we're going to take out the downtrend line, and there's certainly, let me give you a level, there's a little bit of resistance here I can see coming into play right there. There's your first target, and try to quantify it for you. You're talking about 9% or so to that first target, and if we get up to the second target there, that's another, that didn't work. I'm trying to grab this line, extend it. That would be about a 15% or so run up there to that 98.77 target. So some potential there, and that's LE. Let me show you what it looks like on a 60-minute. Okay, and this is what I like to see. We have the divergence not just on the daily time frame, but I like to use these shorter term intraday charts to help hone down entry and exits. So we have the divergence also, 60-minute bullish divergence here on this 60-minute chart, and that's it. So that was just an uptrend line that it broke and that triggered that wave of selling. I think this cleared out a lot of stops on longs and sucked in some shorts, and so here's your wedge pattern. If we can pop it, we should run. I don't have trend lines here. I already gave you the targets on the daily chart. And here, I'll give you one here if you want to trade on the 60, just right here. Look for those reaction highs right there. It comes in with some other highs, and that's 999, about 99.98. There's about 17, 18, roughly that same run up there, about 18%. So that is live cattle. Feeder cattle looks similar, but this is the one that I'm trading. And then we have what's the other one? Hogs. HE, that's live hogs. And there's your downtrend line, which was popped today. Looks like, might be limit up. They were up 6%. I don't know. I don't trade these guys often, but you can see it stopped trading earlier. You can see these little, and remember, they shut down too earlier in the day. There was a break right there, and that triggered this big drop, but boom, we just took out this trend line. I don't have divergence here, but I do like what I see on the chart. There's a potential long-term target. That was a big level, 74.156. We broke it, back tested there, and had this little trend line. That was a objective short entry. Not that I was following it at the time. I didn't point it out. I didn't see it back then. If I did, I forget, and I didn't trade it. But I do see this potential bullish setup now. And let's just look at the daily chart here, and then we'll give you the ETN for it. All right, so what I see here on the daily chart, let's go in a little closer. Let's go to a 12-month period. There, you can see it there. What I see is a nice, big, fat, bullish engulfing candlestick. That's when, and also potential selling climax. Let's throw up volume, see what it looks like here. I haven't done that yet. Yeah, there it is. All right, this is what we call a selling climax. It's a potential selling climax, but what you look for, a couple things. It's like a buying climax in reverse. A buying climax comes after an extended uptrend. Don't look for them after a bottom. You want to see a bull market, a long uptrend, bullish trend, and then finally a big move up on increased volume. Now, I'm not showing you that here. What I'm showing you is the inverse of that, or the opposite, and this is a potential selling climax. See that sharp plunge right there? That's what you want to see after an extended downtrend. All of a sudden, this is just people giving up, throwing in the towel, capitulating, the longs, can't take the pain anymore, whatever reason. and then boom, you followed by a sharp drop down. Now I will say this: ideally, on a selling climax, you want to see a bigger surge in volume. So I'm just now kind of picking that up. It didn't have a huge surge. You should see bigger volume on there, but so back off, that's one thing to look for. This was maybe a near-term selling climax there. And there was also a whipsaw signal, and that's what I like to point out sometimes. These things are not 100%. So there was no, it didn't engulf. Never mind. I did not take out that previous body. What I was looking for here and going over is this bullish engulfing candle, and that means this entire candle engulfed that previous candle. Here, you probably can't even see it yet on the video. I sometimes realize I'm doing these videos and these things come out small. There it is. So this candle, the body of this candle, that green part, engulfs the body of the previous candle. And then what I like to say is, bullish engulfing candles, the best thing to do is wait for confirmation via an additional green candle. In other words, another green candle the next day. That's what we have. So this to me is a potential bottoming pattern, and could set the stage for a lasting rally in hogs right there, lean hogs. And so how to trade it, I already think I gave you some levels on that previous chart, but if you're an ETF trader, ETN trader, cow. This is not just for cows. It's the livestock ETM. It's live. It's what I just showed you, the two I just showed you, live cattle and live hogs. Lean hogs, not live hogs. Live cattle, lean hogs. So those two are in here. Kill two birds with one stone. There's the, you can see we don't have the divergence on the PPO, but that's all right. We have it here on the RSI. And again, more importantly, much more importantly, we have it on the futures, on at least on live cattle. And there's your targets. I may add this one as an official trade. It has a little work to do because you have resistance here at 31, 32. But these are all potential targets. And let's just say right now, my preferred swing target, or my maximum target at this point in time, is this one right here, 40.62. And I think a minimum swing target here, well, that's a minimum target, but preferred sweet target right here, sweet spot's about that 38 level, but it depends how we look when we get there. And I'd put pretty good odds we come up here to 40.62. So what would that be if we can hold up and these charts hold up and continue to form bullishly? That's about a 35-36% move in that ETN. Oh, told you that was it. Nope, one more and then we're done. DBA, I've harped on this one for a while. This is a one-size-fits-all ag commodities. If you want to avoid crude oil, because there are some commodity ETFs and funds out there, and they're very heavy in crude oil and or industrial metals. You want a pure play on agriculture. Everything I just covered pretty much. Here it is: live cattle, soybeans, sugar, corn, cocoa, wheat, coffee, lean hogs, feeder cattle, and cotton. That's the only one I didn't cover in this video. And that's it. Clean, big, positive divergence, starting to move up. And minimum target right here, 1467. Next target, 1514. Potential swing target right here, 1640 right now. If we get there, that would probably be a good place to book profits. Maybe up here to about 17 right there. That's about a 22% lift. That I will just call that right now my maximum swing target at this point in time, because it's significant resistance. So there's some ideas for you. Let me wrap it up here and get this video out to you guys before the close. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.